So if you've never bought a home before, the entire process can seem a bit overwhelming. First, you got to get pre-approved. Then there's all these different loan options. Then there's a bunch of people trying to help you out: insurance, attorney, inspector, lender, realtor. And meanwhile, you're trying to pack up all your stuff in the next 30 days, get all your money organized, and you want to feel confident and educated about your decision. I know exactly how you feel, and most people have unanswered questions and uncertainties about this process. And that's why I'm making this video. It's specifically for you. I'm going to answer the top 10 first-time homebuyer questions to make sure you don't have any confusion and that you feel empowered for your home buying journey. If you like this topic and you want more videos like this that help you along the home buying journey, subscribe to this channel and hit that notification bell. In my 17 years as a mortgage lender, I've helped over 4,000 families buy, refinance, or purchase their first home. A lot of them start their journey right where you are. They have no clue what to do next. They're not sure what they qualify for. They're not sure what the first step is, and they're feeling overwhelmed and a little bit of anxiety. And I'm sure you've heard about the horror stories. I hear about them every single month. Lack of preparation, costly mistakes, big surprises, not closing on time, and having to get all your stuff out of a moving truck and moving back in with mom and dad. I'm going to make sure you do not fall into those traps. So before you do anything else along your journey, watch this video all the way through, take some notes, and let's make sure you're equipped to have a successful home buying experience. Question number one is, how do I know when I'm ready to buy that first home? Here are a few indicators that are going to help you really think this through. Number one is savings. Do you have enough money saved up for at least a 3% down payment plus closing costs? Now, closing costs vary in every city, but typically it's 2 to 3% of the sale price. In addition to closing costs and down payment, you want to have a couple extra bucks saved up for any maintenance, repairs, or upgrades after closing. In addition to closing costs, we need to make sure you can comfortably afford your mortgage payments every month. So how's your employment stability? Have you been there for a few years? Is it a brand new job? Are you part-time, hourly, commission, bonus? The stability and consistency of your income is going to determine if you're ready to buy that home. Now, these aren't the only topics you should be thinking about from a financial standpoint, but your cash savings and your current monthly income are two big factors that are really going to determine if you're ready. Question number two is, what do I qualify for? Well, to determine that, you need to go through a pre-approval process with a mortgage lender. And the process is pretty quick. It can usually be done within 24 to 48 hours by you entering some basic information about your income, your savings, and your credit history. From there, you'll schedule a call with your mortgage lender to talk through your buying power and your budget and to get alignment to make sure that the properties you're looking at are going to keep your monthly payments within your budget. Once the mortgage lender has that information, they'll be able to help you get alignment on your budget so that when you start the home buying process, you're looking at properties that keep the monthly payments within your financial goal. Question number three, what are the requirements for a pre-approval? Generally speaking, all banks and mortgage lenders follow the same process when pre-approving a home buyer. We look at the three pillars of lending. The first one is your income. Where do you work? What do you make? How long have you been there? The second one is your savings. How much do you have saved up for down payment, closing costs, and some money for reserves after closing? And the third is your credit history. Not just your scores, those impact your rates, but what type of other monthly expenses do you have? Auto loan, credit card, student debt. All that's taken into account to determine your buying power. Question number four, what type of mortgage loan options are available and which one is right for me? Now, the answer to this video could be an entire YouTube video on its own, but there are three factors that go into determining the right loan. Number one is your timeline in the property. Number two is your risk tolerance. And number three is what's being offered currently in the market. Sometimes it makes sense to consider short-term loans versus long-term loans, but a great lender will walk you through that, take your risk tolerance into account, give you a few options, and you ultimately make the best decision that you feel comfortable with. Question five, how much should I have saved up for a down payment? Well, the answer here varies. Are you buying your first home, your second home, an investment property? As a first-time home buyer, you can put as little as 3% down. As a second-time home buyer, you can put as little as 5% down. If you're buying an investment property or a second home, you might need up to 20% down. A good mortgage lender is going to help you identify what loan options are available, what down payment requirements you should consider, and ultimately, it's a goal of financial equilibrium. You want to put enough down to qualify and enough down to keep your monthly payments within your budget, but you don't necessarily need to break the bank. So make sure you talk to your lender for that sound advice. So real quick, which of the first 5 questions resonate with you the most, and have you picked up anything new? Question number 6, what additional costs or surprises should I plan for financially? Well, we already talked about down payment and closing costs. Minimum down payment is 3%, and on average, closing costs are about 2 to 3%, depending upon the state and the city where you live in. However, I always advise home buyers to have at least 3 months of mortgage payments set aside for reserves and to have a couple grand aside if possible for any maintenance, any repairs, or any cosmetic updates like painting that you want to do before you close. Question number 7, how do I get the best interest rates, especially if I'm a first-time home buyer? Generally speaking, your interest rate is primarily driven by your credit score. The higher your score, the lower your rate. The lower your score, the higher your rate. So make sure you're monitoring your credit a few months before you get pre-approved so you can make sure it's as high as possible when you go and apply for that mortgage. In addition to your credit score, sometimes there's different programs and incentives available based on where you're buying and whether or not you're a first-time home buyer. So talk to your lender, find out if you qualify for any unique programs or incentives, and make sure that credit score is as high as possible. Question number 8, speaking of credit scores, what credit score do I need to qualify and how do I get the best rate? So the answer here is a little bit tricky because different loan options have different credit score requirements. Some loan options allow you to have a credit score in the upper 500s. Some loan options require a credit score at 620 or higher, and some even require a credit score at 720 or higher. As I mentioned before, to get the best interest rates in the market right now, you have to have a credit score over 720. And generally speaking, as your credit score drops in 20-point increments, 720 to 700, 700 to 680, 680 to 660, each 20-point increment you go down, your interest rate's going to go up. So again, the goal is to have as high of a credit score as possible. Make sure you're paying attention to it. Make sure you're paying all your bills on time and monitor it online. You can do that for free. Question number 9 is, what do I look for when evaluating different homes on the market? Well, the first step here is getting pre-approved and understanding your budget. That way you can filter your search so you're looking at properties that fit your monthly payment goal. From there, you want to make a checklist of all the things you need in your home. Location, commute to work, property type, what does a neighborhood look like, parks, grocery stores, restaurants, shops, bars, how many bedrooms, how many bathrooms, parking, garage, indoor space, outdoor space, the list goes on. A good realtor will help you think this through and help you map out a checklist so you know exactly what you need in that first home. Question number 10, do I need to hire a home inspector? My opinion is 1000% yes. Listen, the last thing you want to do is close on a property and a few weeks later find out there's all types of different repairs that you didn't spot when you initially walked through that home. A good home inspector is worth their weight in gold. It might cost you $300 to $500, but if you spot any significant repairs, you can negotiate and have the seller fix those. Now, I also share educational content like this daily with over 40,000 people on Instagram. So if you want to keep learning about the home buying journey, follow me on Instagram on @JustinLopatin and send me a DM anytime with any questions that you have. And if you found value in this video, drop me a like and share it with someone you care about.